wish to acknowledge that our Indigenous peoples have lived here for time immemorial and are living here now. The Danforth Multifaith Commons is situated on the traditional lands of the Wendat, the Anishinaabe, the Haudenosaunee Confederacy, the Mississaugas of the New Credit, and now home to many diverse First Nations, Métis, and Inuit people. This land is part of a peace treaty called Dish with One Spoon, created through ceremony among Indigenous chiefs several centuries ago. The agreement welcomes other First Nations and settlers with the understanding that everyone eat together in peace and take only the food that one needs to ensure plenty for future generations. As treaty people, we are all called to care for the land. I will work to honor and respect the teachings of our Indigenous people. Now I'd like to hand it over to Liat.
Thanks, Laura. I'm just going to speak very briefly about the Danforth Multifaith Commons for those who aren't aware. The Danforth Multifaith Commons came into existence in 2020 when 3 faith communities, the Danforth Jewish Circle, East End United Regional Ministry, and Neighborhood Unitarian Universalist Congregation, joined together in a long-term partnership. This partnership formalized many years of multi-faith collaboration among our congregations, as well as other faith communities. Today, a wider interfaith network is called East Toronto Multifaith Community and includes the 3 congregations that are part of the Danforth Multifaith Commons. The partnership among the 3 communities of the Danforth Multifaith Commons does more than give each community a financially sustainable shared home at 310 Danforth Avenue. It illuminates the promise of what those of different faiths, but similar values, can learn from each other and achieve together. All 3 communities embrace people of all backgrounds and identities and share a strong commitment to social justice. And now, without further ado, I'll pass you on to Heather to introduce our final event of this year's Danforth Multifaith Commons speaker series focused on sustainability. Heather.
Thanks, Liat. Thank you all so much again for joining us. We are very, very lucky to have with us Dr. DT Cochrane. DT has a graduate degrees in economics and social and political thought. His research and publications have covered a range of topics, including pipeline finance, big tech, and corporate power. Raised on a Saskatchewan ranch, he now lives in Peterborough with his partner and children. And when not figuring out new ways to use pivot tables, he can be found reading fiction, taking photos, and enjoying the outdoors. So with that, I'm going to hand it over to DT. Thank you so much for being here.
First of all, thank you to the Danforth Multifaith Commons and to Heather Cohen for inviting me to come and present. As I mentioned to Heather earlier today, I'm just getting over a sickness, so I've been pretty housebound. So forgive me if I have a little bit of energetic puppy energy at the beginning. I'm just excited to be talking to people and mostly back to full health. And also forgive me if my energy wanes a little bit as we move on in the presentation. It's honestly been a second since I've done a presentation of this length. I'm really, really looking forward to it. I love every opportunity to kind of talk about the big issues of tax. We so often end up talking about very specific measures, what this specific event that occurred, what are the tax implications, what specific tax policy would we like to see and why. So being able to talk about tax justice in big, broad strokes is really exciting. I'll try to keep it grounded in our actual work. I'm a very empirically driven economist, so I have lots of, I hope, convincing evidence to support myself, but it's nice to be able to do some big picture stuff. So thank you for giving me that opportunity. Tax, of course, is a huge, wide-ranging topic. I'm an economist. Taxes are obviously very important to the economy, but there are also important legal aspects to taxes that I'm continually confronting. And thankfully, we have someone very intelligent who helps us out with some of the legal stuff when it's challenging to us. There's tax accountants. Tax means something slightly different to business people. So I am approaching this from an economist's perspective. So forgive me for that. in that complexity, it can also be quite boring. And I think sometimes that's done on purpose. There are people who don't want us thinking critically and popularly, among everyone about our tax system and what the tax system should look like. It's made to be, really daunting. Of course, we all experience tax. No one really likes paying tax at any point in time, but most of us also understand why we do so, why this is a responsibility of being a member of society. But getting into some of the details, what should our tax system look like? That's a conversation that we're not often given the opportunity to have. I'm going to start with the substantive stuff with a report that we issued, Canadians for Tax Fairness issued in the end of 2022. I should mention that everything I'm presenting is based on research that I have done as the economist for Canadians for Tax Fairness, but I will be expressing some views that are my own and not necessarily the organization. So don't hold anything I say necessarily against them. Before we get on to some of that substance stuff, I'm going to do a little bit more narcissism and talk about me. So as mentioned, I do have a BA and master's in economics, which are the same degrees as a certain former prime minister of ours. How did I end up in economics? I actually went to university with a social justice inclination. I wanted to be involved in social justice movements, and I started off in medicine, then switched over into sociology, and then found my way into economics, all while strengthening my commitment to social justice. And the main reason was, in my social justice learnings, I saw corporations as these powerful, daunting entities that often were doing things that were harming the rest of us. And it seemed to me that government should be doing something to confront this and stop the harms that corporations were visiting on the rest of us. At the same time, I was hearing economists justifying corporate behavior and excusing the things that corporations were doing. And I couldn't square what they were saying with what I was seeing. And I thought, maybe I'm wrong. Maybe I'm not getting something. Maybe there is something to be learned from the economists. And so I put myself in their hands. Show me how I'm wrong to see corporate power as a harmful thing when you're saying, oh, what we want is a free market and that competition will lead to these wonderful outcomes. And if we sign these international trade agreements, we'll get closer to that. And 2 degrees later, had they convinced me I was wrong? No, I was just more convinced that they're wrong. And so for any of you who also feel like the things that most economists say feel wrong and don't necessarily feel equipped to critique it, just know that you're right. The economists, for the most part, in what they talk about are wrong. From my master's in economics, I went on to do a PhD in social and political thought because I still wanted to understand powerful corporations, and following to another degree in economics wasn't going to let me do that. So social and political thought is an interdisciplinary program where I could study something as amorphous as corporate power. And I did so with really a relatively simple example, the De Beers diamond cartel. I was looking at one corporation selling one product to understand, how do they act in the world? Where do the prices of diamonds come from? Is the law of supply and demand really what's functioning here? Are they behaving like a monopolist, as the mainstream theory says? And as simple as that one company with that one product was, it was so much more complex than what I was taught by economists. And it confirmed to me that this thing So apologies to anyone who has maybe been traumatized by Econ 101. You don't need to understand this graph if it's not one that's familiar to you, but this is the basic law of supply and demand graph. You have an upward sloping supply curve, a downward sloping demand curve, and where those two lines intersect, that's the equilibrium market clearing price. And what economists want us to do is get out of the way of this process as much as possible to let the market work as the market just wants to work. This is an inherent thing that just kind of exists within all of us. This is less than worthless to helping us understand actual economies. I'm not saying that supply, actual real world supply, and demand, actual real world demand, are meaningless. I'm saying this model of supply and demand are meaningless because it doesn't explain what needs to be explained. And I'll discuss this a bit later with some coming out of the tax talk. So moving on to the topic of tax justice, beginning with some of Canadian for Tax Fairness's recent findings on some tax injustice. I do apologize. There will be a few charts in the presentation. I know some people feel quite alienated by charts. So this chart shows the tax avoided by Canada's biggest, most profitable corporations. It shows 5 years of the tax avoided. It shows that for 2017 to 2019, that tax avoidance averaged about $13.5 billion. So how do we measure this? We look at how much we would expect the corporations to pay based on how much profit they made and the statutory rate, the rate that's in the books. Corporations in Canada are supposed to pay about 26.5% of their profits in taxes. So we look at if they had paid 26.5%, this is how much they would have paid. This is how much they actually paid. And that difference is the amount of tax they managed to avoid. So 2017 to 2019, we see that that is growing, but it averages about 13.5 billion. 2020, pandemic year, it drops quite significantly, but is still closing in on $10 billion. Then in 2021, it jumps dramatically. It increases to over $30 billion. Canada's biggest, most profitable corporations managed to avoid a combined $30 billion in taxes in 2021. So this was an analysis that updated a similar analysis done by the group Corporate Knights and the Toronto Star in 2017. They had looked at 2011 through 2016, and we wanted to update that to see what had happened to the tax gap in the intervening years. In 2017 through 2019, it had increased from what they had found in kind of a predictable way. It's this massive jump in 2021 that honestly caught us off guard. We weren't expecting to have this huge increase in corporate tax avoidance. So we can think of tax avoidance as falling into kind of 3 broad categories. The first category is out and out evasion, and this is illegal. This is not paying the taxes that you know that you owe through various means of deception. It's intentional and it's knowingly illegal. We're not accusing any corporations of actually doing this for our own legal purposes. I'm certain it happens as a calculated risk. I don't think it's super common because I think for the most part, it's too risky. And there are lots of other ways that corporations, as we'll discuss, can avoid paying taxes. They don't need to do the out and out illegal things. So you have the illegal evasion at one end of this spectrum of tax avoidance. At the other end, you have what we might think as legit tax avoidance. So the government offers means for corporations to reduce their tax responsibilities with tax credits of various sorts. We saw in the 2023 budget that the government undertook its largest climate action to date, with all of it flowing through our tax system in the form of tax credits, refundable tax credits. So that means companies that qualify for these tax credits can reduce the taxes that they pay by the amount of the tax credit. So these are credits, deductions being used in ways that the government intends. The government implemented a policy, they're trying to achieve certain aims, and they're using reduced taxes as a way to achieve that. Now, we can debate whether or not the benefits to society from those tax policies are actually beneficial, but we really can't blame the corporations for making use of what the government is offering in doing the thing that the government is wanting them to do. And then we have this massive middle area that, for our purposes today, I've labeled aggressive tax planning. And this is the creation and the exploitation of loopholes. This is bending the rules of tax laws. This is using tax policies in ways they weren't really intended to. This is setting up a series of financial transactions that are almost entirely designed to avoid paying taxes. They're following the letter of the law, but not the spirit. And there are strong incentives for companies to do this. There are strong incentives for companies to operate right at the margins of the tax law. And if they fall afoul of it, if they cross the line, if the CRA decides, wait, this claim that you've made, this transaction that you've undertaken clearly is not legitimate, and we're not going to accept it, and you're going to owe these taxes, there's really no penalty for it, because you have, you can claim that, well, you were following the letter of the law, you thought you were doing what was appropriate, and okay, now you'll pay your taxes. So if you didn't aggressively tax plan, you would pay those taxes. If you do aggressively tax plan and you get called out on it, then you pay those taxes. So if you don't get called out on it, then you get away with it. So of course, companies are going to aggressively tax plan. Now, the main problem with this massive tax gap, in our opinion, is that we don't actually know how much avoidance is in each category. In this $30 billion avoided in 2021, how much is outright illegal evasion? How much is the use of legitimate tax credits in the way that the government intended? And how much is this aggressive tax planning? So in 2021, part of the reason it shot up was likely that companies were able to claim losses that they made in 2020, and they were able to balance those losses against the profits that they made in 2021 to reduce their taxes. That's doing what the government allows them to do. I would question how this gets enacted, because it's certainly not symmetrical. Companies are going to make sure that the public shares in every single dollar that they lose, because that's what this does. This makes sure that they don't have to pay taxes on their profits when they make their losses, which reduces the revenue to the public. So we all get to share a little bit in their losses. Is that really a benefit to us? I question that, but this is them doing more or less what they're allowed to do. While on the profit side, as I've explained, they have every incentive to make sure they don't pay all the taxes that they should pay on the profits that they make. Now, even the average losses before the pandemic, before this massive jump to a $30 billion tax avoidance, that's too big. $13.5 billion would more than cover a national universal pharmacare program, for example. So this is revenue that the government is losing out on, revenue that's staying in the hands of corporations, revenue that then passes on to the owners of those corporations, worsening inequality, and it's revenue that now the public doesn't have control of. It's money that remains out in the system where it can become an exacerbator of inflation, which the government is understandably and rightfully concerned about. But for some reason, that concern never focuses on where a lot of this money ends up pooling, which is with the very wealthy. I think one of the under-discussed problems with all of this, with this explosion in aggressive tax planning, is all of the creative energy that goes into it. Because as I have studied this more and more, I have almost a begrudging respect for the innovation that's involved. As mentioned, the tax code is incredibly complex, and the tax accountants and the tax lawyers who come up with these schemes are able to manipulate that code in, frankly, some very ingenious ways. That means we're developing these kinds of skills. We're developing skills of aggressive tax planning that are antisocial skills. And I don't think those are the type of skills we really want to be developing. We actually have another person who occasionally volunteers with us to help with some of the accounting stuff that can be tricky for me, again, as an economist, not an accountant, who was a corporate accountant and left because in their words, they were sick and tired of helping corporations get away with not paying their taxes. Like, that was part of their job, was reducing the amount of taxes that corporations owed through every possible means within the law. You know, coming right up to that margin and flirting with it, because if you get called out, now you just have to pay the taxes that you otherwise would have had to pay. Before I carry on talking about some of these tax injustices, I do want to talk about some of the good news aspects in the tax justice world, because I'm very aware that this can all feel really inevitable. We just hear this story again and again and again. Massive corporations, huge profits, giant payouts to their executives, dividends sent to their shareholders while avoiding massive amounts in taxes by shifting profits to tax havens. And yeah, it's happening constantly. It's what we work on. But we also want people to understand that this is not inevitable, that there are efforts made to reduce this to greater and lesser effect. There are things that in the past have had greater effect. There are things that other countries have done that have greater effect. There are things that our own government, our own current government has done that have had some effect. In the opinion of myself and my organization, it's too little. They need to do much more, be much bolder, but they are doing some things that are having some effect. For example, in the Toronto Star Corporate Knights analysis of the size of corporate tax avoidance, they found that the big banks were by far the biggest avoiders of tax. By the time we did our analysis, they were not. They still avoided billions of dollars in tax, but it was a much smaller percentage of their profits that they were avoiding paying. Now, we don't know the exact reason why, just as we don't know exactly how corporations are avoiding the taxes that they're avoiding. We don't know exactly why the size of the tax avoidance by the big banks was reduced. Was it some government action? If so, that's another thing that we should know. The government should be explaining, oh, here's why that actually happened. It wasn't a fluke. It was this policy change or some other reason. We should know why this occurred. So one of the sources of good news is actually related to the title of the talk, which was about the certainty of taxes. And certainty, as understood by tax judges, is that when you pay your taxes in good faith, according to what you understand the letter of the law and the spirit of the law to be, that That should be it. You should never be on the hook for an interpretation of the rules that you couldn't possibly have known. So this is trying to offer to all taxpayers certainty with respect to what your tax obligation will actually be. This has been interpreted with, I would say, a ludicrous level of precision and intensity by Canadian courts, which means that some transactions that clearly were intended to avoid taxes were ruled legitimate by the courts after the CRA had challenged them on the grounds that going against the company siding with the CRA would be undermining the right to certainty of those companies. But a recent court decision, and I won't explain all the technical details of it, which I barely get as someone who immerses themselves in this day after day, but the judge's ruling basically said, if you're flirting with the line between what is allowed and what is disallowed, you don't have a right to certainty. You're undertaking some creative accounting. And I don't necessarily mean that, derisively. The judge didn't mean this derisively. It's like, yeah, you're trying to avoid paying taxes. It's understandable that you would do so, but you're doing so in a way that is at the very least at the boundary of what the tax law allows. And now the tax authorities have said, sorry, that was not allowed. You stepped over the line. You don't have a right to certainty when you're operating in that zone. So when you're operating in this aggressive tax planning zone, you don't have that same right to certainty. And I would argue that it undermines the certainty of the rest of us, because the rest of us have less certainty about the revenue that the government is going to be able to collect, to be able to provide the goods and services, the public goods and services that we all rely on. Another piece of good news is that the government is updating what's called the General Anti-Avoidance Rule. So this is kind of the catch-all rule that says we get to declare if you have violated the spirit of the law, that you have, combined a series of transactions that each on their own wasn't doing anything contrary to what the tax law allows, but in combination was clearly about avoiding taxes. So it's meant to be this sort of last line of defense. GAR, it's commonly known as, and it's hugely out of date. In the age of the global digital economy, the techniques that are used have just left GAR behind, and it's part of the reason why the courts have been siding so regularly with some egregious tax avoiders. And the final source of optimism for me that I'm going to mention right now is the international movement to deal with taxation. To my mind, it was a huge mistake to allow corporations to just proliferate around the globe without having an international tax body. We needed a global tax body to deal with global tax entities. Corporations and jet-setting billionaires are pretty much the only categories of global tax entities. And they have exploited the fact that tax bodies remain siloed in their nations to reap billions and trillions over the decades. The international movement has been at the OECD for a couple of decades. It was a good sign that the OECD was acting on this. They recognized the problem. They wanted to do something about it. Unfortunately, that process has broken down for all kinds of different reasons. But the people working on this issue have shifted to the UN, which is where this probably needed to be in the first place. And so there's now a growing movement to see the UN create some kind of global tax body, which would be a wonderful achievement. Moving on. So I've discussed the problems kind of at the top of the economic hierarchy. Now we're going to move down to the bottom to talk about what some of the consequences of that are. And I'm going to begin with just another dose of self-promotion. This is a tweet. This is me retweeting Canadians for Tax Fairness, tweeting a thread that I actually authored. And so my tweet reads, 1, public money helped lift 1 million people out of poverty in 2020. 2, corporations reaped a lot of that money as record profits. 3, the government of Canada is letting the corporations keep it while people fall back into poverty. Do that twice. There we go. So the first substantive tweet in the Canadians for Tax Fairness thread reads, and this gives some of the details of what I'm talking about. In 2015, Canada's poverty rate hit a high of 14.3%. In 2020, it hit a low of 9.3%. So this is where we give some credit to the current government. We frequently criticize them for what we see as their policy failings on the tax front. But with respect to reducing poverty, this has been a pretty substantial achievement. It's been lots of little things. They haven't necessarily had one big splashy thing that was responsible for this until 2020. So the poverty rate has been declining since 2015, but 2020 saw the largest one-year decrease. Over 1 million were lifted out of poverty thanks to unprecedented income support during the pandemic. So the government was doing lots of little things. It was reducing poverty year by year by year, but we saw the biggest one-year decline during the pandemic because of, I believe, and I think this evidence is quite substantial, that CERB basically acted as a kind of universal basic income, guaranteed annual income, basic income guarantee, all these different acronyms for essentially the same thing. But CERB made sure that everyone, almost, with some notable exceptions, which I'll discuss in a bit, had some income. And this had a huge impact on reducing poverty. This was a massive success that the government has never tooted its own horn about, for reasons I don't fully understand and don't really want to speculate about at the moment. So the tweet thread continues, the withdrawal of that support put almost 500,000 back into poverty in 2021, hitting historically oppressed, disadvantaged communities the hardest, especially Black, Chinese, and Indigenous people. 1 in 5 people below the poverty line belong to these groups. This was a choice. So the credit I gave them before, I'm fully withdrawing it now, because the government could have kept those people out of poverty and they chose not to. They could have seen what was happening. I believe they did see what was happening. And whether they saw it or they didn't see it, it's a complete dereliction of duty to allow this to happen, to cause this to happen. So I mentioned that CERB was far from perfect as a universal basic income. I'm sharing a kind of rough chart. I apologize that some of the text is a little bit small. This is still some research in progress, but it highlights one of the groups that has been left behind for about 30 years now. And that's single female elders. That's women who, in the parlance of StatsCan, are not in an economic family, meaning single, over 65. What this chart shows is their poverty rate since 1976. There was an incredible decrease in their poverty rate, which was at 60% in 1976 to less than 10% in the early 1990s. And then it began to climb. And it has worsened, not quite continuously, but pretty closely to continuously since the introduction of austerity by the Chrétien liberals. It is now above 30%. And while almost every other single group saw a decent reduction in their poverty rate in 2020, including single male elders, single female elders did not. And I want to just quickly plug an aligned organization called Single Seniors for Tax Fairness. They work on some of these issues, which especially are hitting older women for all kinds of reasons that they understand much better than we do. So this is part of the research that I'm working on at the moment, which is why this chart is not quite as pretty as I like my charts to be, but I wanted to share it with you folks because I hope it is making you as angry as it is making me, not least because we can see that we could do something. Between 1976 and 1994, we did something and we managed to reduce that poverty rate. And then we stopped doing it. Moving on. Okay, so continuing with the tweet thread, 2022 will be worse. High inflation combined with further reduction of government support will have put more people in poverty. It does not have to be this way. Public money spent to support people in 2020-21 also fueled record corporate profits. Increased government spending inevitably leads to higher corporate profits. Corporations control a lot of the goods and services that we need and want. And in the process of them selling us the things that we need and want, they siphon off a portion as profit. That's the system that we live in. So as government was supporting people and people were spending that money to support themselves, that money passed through corporate hands. And there's a mechanical process that as government adds money into the economy, corporate profits go up. But corporations weren't content to just accept that, oh, we're going to have a larger pool of money to draw our profit from. No, that can never be enough. I promise this is the last chart that you will have to see. So this chart shows Canadian corporate profit margins from 2002 to 2021. So the profit margin is profits as a share of their total revenue. So basically, if every dollar that a corporation collects as revenue when you buy something from them, how much do they claim as profit? From 2002 through 2020, I can't remember if I included 2020 in the calculation or not. I think I did. The average profit margin was just below 9%. So they took about 9 cents of every dollar as profit. In 2021, it jumped up to 16 cents. So if every dollar that a major Canadian corporation took, they took 16 cents, 7 cents more than they had been taking on average over the previous 20 years. So more of the money was trickling up. Now, this is inflation. So recall I mentioned the uselessness of the supply and demand chart that you learn about in Economics 101, the intersection where equilibrium is determined. This is what I mean when I say it's worse than useless at explaining actual economies, because you will hear that inflation is about supply and demand dynamics. Okay, that's not explaining what's happening. That's what needs to be explained. What are the supply and demand dynamics? Why is supply where it is? Why is demand where it is? And I can tell you from my study of De Beers, corporations have a role in both sides of those things, which is perfectly common sense to most of us. You have to have a PhD in economics not to understand this stuff. Corporations control the supply of what we get, and they also have a lot of influence over the demand for these things. I like to start from the much simpler question, who increases prices? It seems naive. Okay, most prices are set by corporations. I go into the grocery store, I don't get to haggle. I just take the price that's there facing me. Now, they can't set them wherever they want. That's the interesting question. What determines where they get to set them? Now we start to do the research that needs to be done. We don't just say, oh, well, it's supply and demand, or we shouldn't say that. So I am just about done. For the last bit, I did write it out to make sure I would get everything that I wanted to say. So forgive me for reading for the last 2 minutes. So this brings me back to my economist origin story. I wanted to understand corporate power in order to speak truth to that power. Two of the most effective checks on corporate power are democratic governments and unions. And taxes are a key tool for the government to check corporate power. In 1966, the Royal Commission on Taxation, commonly known as the Carter Commission, released its report on how to overhaul the tax system to be more fair. One of its guiding principles, established as a result of intensive study by the commissioners, was that taxes should be allocated according to, in their words, economic power. Those with more economic power should, they said, pay a higher portion of their income. Now, they were focused on individuals and actually said it would be ideal if organizations like corporations were not taxed at all. But I think their perspective would be different if they were conducting the commission today. Corporate power is a quantitatively and qualitatively different thing than it was in 1966. Not least, corporations were formally granted corporate personhood in 1975. This gave them the rights, privileges, and powers of natural persons. Corporations are happy to maximize those rights while shirking the responsibilities of people, such as contributing to public provisioning. Thank you.
Thank you so much, DT. Please, if anyone has some substantive questions for DT, feel free to put them in the chat, or if you would prefer to ask them live, just raise your hand. Well, maybe I'll give people a few minutes to gather their thoughts, but in the meantime, I'm going to take advantage of my position as moderator to ask you a few questions. So the first is about kind of resourcing, and as you know, the CRA recently went on strike, and we were curious as to how CRA resources might impact, some of the suggestions made in your presentation.
Yeah, so the CRA is under-resourced. It has been for years and years and years. The Trudeau government has, in nominal terms, been increasing the support, but the Parliamentary Budget Officer put out a report showing that once you account for inflation, they haven't actually seen any increase in their resources. Their resources need to grow to keep up with this increasing sophistication of tax avoidance. Corporate tax files are, I'm sure everyone understands, like very, very complex. This requires a high degree of expertise. It takes a lot of time to process these files. And so the people who do it need to be well-resourced. Otherwise, they're just trailing, leagues behind those that they're trying to assess. One of our most recent concerns with resourcing the CRA is with the climate measures that I mentioned before that have been introduced through the tax system. They're introducing these tax credits, which we have quite mixed feelings about. Best case scenario, they could be, they could be effective in achieving some good positive ends. Are they sufficient? Far from it. But what the government has essentially done is tasked the CRA with assessing whether or not those claiming these credits actually qualify for them. Is the CRA equipped to do that? This requires expertise that, to my knowledge, the CRA does not possess. Is the government going to provide them with the resources to acquire that knowledge to make sure that this assessment can be done? Because if you're going to deliver climate action, climate spending through the tax system in the form of tax credits, then we need high degrees of transparency and accountability for that. And the CRA is the public's line of defense at making sure these credits are not exploited just to simply increase the bottom line of the companies that can be claiming them.
For sure. Thank you. So just turning now to the chat, because we've had a couple things come up there. Just a comment around tax avoidance being not necessarily aggressive. And then a question on what we as the average citizen can do other than voting appropriately and how we can help to make change. And I might just add to that also, we have a couple religious institutions on this call. So what can religious institutions do as well?
Yeah, so I don't begrudge your average individual undertaking common forms of tax planning in order to reduce their taxes. We all want a bargain on the things that we get. Taxes are the price that we pay for what governments provide, and we want a bargain on that. That's completely understandable. We have, the government offers means for people to do so. I might question some of the policies that are offered, but people taking advantage of what's offered to them, I really don't have a problem with that. In terms of, sorry, can you repeat the second part?
Yeah, that was more just a comment that we had received, but a question that we got was what we can do as average citizens other than appropriately and how we can help to make change.
Well, the first thing you can do is donate to Canadians for Tax Fairness to support our research. The second thing you can do is get in the ears of, I know people say this, and before I started working in advocacy, government-facing advocacy, I kind of rolled my eyes at it. Get in touch with your representatives, even if they're not, the party that you support, even if they're a party that you actively dislike, let them know. It's not always effective, but sometimes it can be very effective, especially when things come in like in a wave. And some of these tax issues, they actually have cross-partisan support. Our research has been mentioned in the House by all of the major current opposition parties, like affirmatively mentioned. So tackling some of these issues does have very, very broad support. So whoever your representative is, let them know that this is something that's important to you. If you are a shareholder of any sort, if you really want to get into it, try to bring a shareholder resolution on some tax fairness measures. If this is something that interests you, you can contact me and I can share with you some resources of folks that work on this kind of approach. So for example, there was a resolution at the Brookfield annual meeting calling for Brookfield to adhere to country by country reporting of their financials. So much more transparent about where their revenue and profits are coming from, where they're paying their taxes. A resolution that was introduced for better tax transparency at Amazon did much better than you would ever have imagined. I mean, the chances of it passing are pretty slim, but some very big funds got behind this measure because there is an investment argument to be made for greater tax fairness. It's not what I'm here to make today, but it is another avenue to look into as the average person. And I think the main thing is just talking to your neighbors and making them aware, one, of how much tax is being avoided by. I focused on corporations today. I could have talked about, the top end of individuals and families, the ultra elite who are avoiding taxes. They avoid more money than most of us could imagine making. They avoid paying more in taxes than most of us could imagine paying in a lifetime. Contrary to Donald Trump's assertion, this is beyond just them being smart. This is the same as a middle-class retiree trying to avoid taxes. This is, that aggressive tax planning, playing the system, and also lobbying government to make sure that the rules continue to work in their favor. So talk to people about that, but also talk to people about the fact that we can do something about it. We don't just have to accept it. It's outraging, but it shouldn't stop us from acting.
Thank you. And is there anything kind of expanding on that we as religious institutions might be able to push for differently than as individuals?
I think religious institutions just emphasizing kind of community and social mindedness, making clear that taxes are one of the concrete exercises of that. I am a huge fan of Ursula Franklin, the late great Quaker technologist, and she was part of the Quakers' conscious refusal to pay taxes, which might seem contrary to what our organization advocates, but obviously that refusal was done on much more principled grounds that I would say call attention to what taxes are used for, what they should be used for, the role that they play within our society. So, thinking critically and consciously about how you're participating in the tax system, why it is that we do pay taxes, and then what withdrawal of that payment should look like as a principled thing rather than just a self-serving thing. And also, lots of church organizations have pensions or other funds that they manage that are, investing, so they can be some of the bigger players in pushing for some of these shareholder resolutions aimed at making corporations behave just a little bit better, not by appealing to their conscience, but by changing the rules by which they operate.
Right. Thank you. Lots of questions coming in now. So there was a question about focus on corporations, but I think you kind of addressed that by talking about some of the wealthiest individuals. And maybe while we're on that topic, we'll jump. There was a question around your thoughts on family foundations and trusts.
Yeah, this is an area, we're a small organization. There's so many tax issues that we could be working on right now. The corporate aspect of things seems like the biggest and most important, in part because of how much profit they reaped coming out of the pandemic, the role that they've been playing in driving inflation, and also just me as the lead policy researcher. That's my kind of area of research expertise. We have focused more on kind of issues at the individual level, such as capital gains exemption, which overwhelmingly benefits the wealthiest. The issue of foundations and trusts is one of those big looming ones. The Rogers debacle, I think, really should have blown open some major questions about what trusts are, what they do, the role they serve in society, and whether or not the role that they're playing is actually benefiting Canadians. And unfortunately, those questions just didn't get asked. There are huge tax implications for it. We know that. I don't have a ton of detail about what those are. It's the type of thing that we would love to take on in a really, really dedicated way. It's one of the reasons why we are trying to fundraise and grow, because we do know there are just so many topics that need more attention, and foundations and trusts are right close to the top of that list.
For sure. And then there was a question around RRSPs and if that could kind of count as a form of tax avoidance, or sort of what your views are around that.
I mean, formally, yes. Like, tax avoidance is, if I'm going to be hard on myself, a bit of a weasel term in that it does encompass this broad range, but we use it because there's so much uncertainty associated with it. And the government should be clarifying so that we can feel okay about the legitimate ways that we avoid paying taxes. RRSPs, as they're designed, help the middle class primarily. And, I haven't given a lot of thought to, is it the most effective way of doing things? They don't have hugely deleterious distributional consequences compared to some other egregiously bad government policies. So I think, if you're taking maximum advantage of your RRSP, good on you. I make use of my RRSP as well. That's at that legit end. They are, for the most part, doing what they were intended to do. This is supposed to be a way for working Canadians to save for their retirement with support from the government. And that's basically what RRSPs are doing.
Yeah, and you and I've been doing some research around the GAR and talking about potentially a more purpose-based approach. And so I think that's where that type of discussion comes, like, well, what is the purpose of this initiative? And is it just to avoid taxes, or is there another goal in mind here? So another question we had, and you touched on it briefly in your presentation, was around international discussions on the minimum corporate tax. And I know you mentioned a bit around the shift from the OECD to the UN, but wondering if you could expand a bit on that.
Yeah, so at the OECD, the process of trying to deal with international tax avoidance is called BEPS, base erosion and profit shifting. And so the growth of the global digital economy has really allowed companies to move their assets, their digital assets, into low tax jurisdictions, which then allows them to claim, oh, well, the profits were actually earned there. The profits weren't earned where the sales were made. The profits were earned where the profitable asset, the profitable digital asset, is housed. So we only have to pay tax at that rate. That's kind of an oversimplification of it, but that's the basic problem. And the OECD recognized that this was a problem, and that they wanted to deal with it. And they came up with what's called the integrated framework. It's 2 pillars. One of the pillars is intended to place a tax on the global digital giants, the Googles of the world, and allocate revenue from that tax to all the jurisdictions where these digital giants have footprints. So basically taking it out of the hands of the digital giants to allocate tax based on where they're claiming their assets are, and instead the OECD tax mechanism, Pillar 1, would allocate those taxes collected through this mechanism. Pillar 2 is setting a global minimum tax so that you can house yourself in a low tax jurisdiction, but you can only push your tax rate down so low. 15% was set as the minimum. Where things stand right now, the government of Canada has its own digital services tax, which is basically what Pillar 1 is, on the books, ready to be implemented in January 1st, 2024, if Pillar 1 fails. It looks like Pillar 1 is going to fail. It doesn't look like enough countries are going to ratify it for it to succeed. That failure is being regarded by a lot of poorer countries ultimately as a success, because they feel like they have been left out of this process being driven by the OECD, which is, kind of the Western countries and a few of their favorites, making the decisions about this global tax treaty. And we have kind of heard that Canada has been playing a role in trying to kind of strong arm some of these smaller, poorer countries to signing on to this agreement, but it doesn't look like it's going to succeed. Pillar 2, the minimum tax, looks like it is going to get passed. And so we are going to have this global minimum tax. I don't know all of the ins and outs of the criticisms of it, but the folks who look at the international level much more, who I respect, tax justice-minded people, say it's very inadequate, because it's not just a straight, we look at how much profit you're claiming to your shareholders and then taxing that at 15%. It's, this complicated formula, and then how it's allocated seems really, really dodgy. One thing that our organization has been advocating for is a minimum tax on corporate book profits. So those are the profits that corporations report to their shareholders. And one of the reasons why the effective tax rate of a corporation, the tax rate they actually pay, can be so much lower than what you would expect based on the tax rates in the tax code, is because corporations can tell their shareholders one thing, because those accounting standards, the rules of that are one set of rules, and then they can tell the tax authorities something else. So they can tell shareholders, look how profitable we were, invested us, and they can tell CRA, sorry, we made no money last year. And so we're saying, at the very least, set a minimum tax on what they're telling their shareholders, set a floor under their ability to avoid taxes, similar to what Pillar 2 would be doing, and exactly what the US has implemented as part of the Inflation Reduction Act. And the US passed the Inflation Reduction Act. 6 months later, the minimum book profits tax is on the book. This is the major revenue generating mechanism as part of the Inflation Reduction Act. And they're already collecting revenue from it. I talked to officials from finance. Why has the government of Canada not considered following suit? They pointed to Pillar 2. Well, Pillar 2 is going to come into effect, and we think it's actually superior to what the US is doing. I don't think the two things are in contradiction, and there's actually lots of reasons to have both. Who would be covered by Pillar 2 would not include some major Canadian companies that are then not going to have any kind of minimum tax placed on them. So we think that we should have our own domestic minimum tax on book profits, just mimicking what the US does. And usually that's how the Canadian government likes to govern. Oh, has the US done it? Okay, then we can get, we have political cover to do it. Okay, so do it with the minimum tax on book profits.
Really interesting. And maybe you mentioned there were some internet tax justice international organizations that were really focused on this. Maybe if you don't mind naming them, so if people are
yeah. So if you like to nerd out and want to get into like the technical nitty gritty, there's ICRIT, ICRIT, I believe. I think it has 5 ICRIT, and that's where like. Joseph Stiglitz is one of their key figures. Gabriel Zuckman is one of their key figures. And so some prominent tax economists are part of ICRIT, and they do, some really amazing empirical stuff and offer, some of the great kind of technical criticism. In terms of activism, there's the Global Alliance for Tax Justice. And then the Tax Justice Network. Those are sort of the two big international bodies that work on tax justice issues. Our former director, the Canadians for Tax Fairness former director, Dennis Howlett, is still on the executive of the Global Alliance for Tax Justice, but it's led almost entirely by people out of the global south who, the tax issues that they face are different than the tax issues that we face in Canada. We try to support them. Again, being a small organization, it's one of those things that we would love to do more of, but just lack the resources to dedicate the time and effort to it.
For sure. What maybe one last question, if nobody else has anything, I haven't seen anything more in the chat, just around how do we get people more interested in these issues? You say tax and people either get angry or they tend to glaze over. So I imagine that's something Canadians for Tax Fairness is also struggling with.
Yeah, it's I mentioned at the beginning that these are complex issues, and I think people often convince themselves that they're not going to understand or that it's going to be boring, and sometimes it is boring. For some people, just talking numbers and the technical details, it's a snooze. But when you start talking about international tax avoidance, that's cloak and dagger stuff. So that's as exciting as it comes. So getting people where they're at, understanding, I think this is where the point about this isn't inevitable needs to be emphasized with people, because before the last election, the Broadbent Institute did a poll about tax fairness, and polled the whole swath of Canadians and found huge support for the types of policies that our organization advocates for, including among self-identified capital C conservatives, who are typically thought of as being the party of, are the party of small government and low taxes, but they also see that big corporations are gaming the system. And so for people who do, are believe in capitalism, having massive players getting away with things that small players can't get away with, it's not fair at the very least, and it undermines the system that they support. So, we saw like 70% support among, or maybe 60% support among conservatives for a wealth tax. this is something that our centrist government just completely closes their ears off to. So talking about some specific policies like a wealth tax, getting that on people's lips as a thing that's doable. And I haven't talked about it tonight, but we have lots of things explaining, what a wealth tax could look like, how it could be implemented, the kind of revenue it would generate. The CCPA just put out a new report updating estimates on what a wealth tax would generate, and it is tens of billions of dollars a year. So getting more people aware that there are measures that we could implement quickly that we aren't. And there aren't really any legitimate reasons not to do so. And then getting those people talking to other people.
Great, thank you. I think that's the perfect note to end on. So I will hand it over to Karen Somerville to express our thanks and wrap things up. But for my point, thank you so much. This has been really, really fascinating.
Thank you very much for inviting me, Heather. I really appreciate it. And my apologies if I started talking really quickly towards the end. I thought I was closing in on the end of my time and then realized I wasn't.
Anyway, thank you, Heather, and thank you, Dr. Cochrane, for coming to speak with us. We really appreciated your enthusiasm and your passion. When you were at the end, you were real, very enthusiastic about this whole concept and about I think it was around the poverty level going back up after 2021. And Danforth Multifaith Commons has been very focused on social justice. So what you're talking about is really key to us in terms of trying to make things a little bit fairer and more sustainable for people. But I wanted to thank you so much for all the knowledge that you passed on to us. And I want to thank Heather for organizing and connecting with you and the other members of the Danforth Multifaith Commons Social Justice Committee, Liat, Karen Robbins, Laura, and Nancy, and Lori Rotenberg. So thank you very much. This is our final event in our speaker series, and we've ended on a high note. And we'll try to vote right, and we'll try to do something that improves the situation. So thank you very much.